This is Matthew Kratter from Trade University, and today I want to answer the question, is Bitcoin an unproductive asset? This is a critique I get quite a bit in the comments section, and here's the classic form that this argument takes. Bitcoin is an unproductive asset. It doesn't pay interest, it doesn't pay dividends, it doesn't pay any sort of cash flows, doesn't pay rental income. Therefore, the only reason, and again, this is the argument that someone else is making, therefore, the only reason to hold Bitcoin is the hope that a greater fool will buy it, so-called greater fool theory, will buy it from you for more than you paid. This is the type of argument that was really popularized by Warren Buffett in his critique of gold and physical gold. And it's important to note here the context for his critique. It's not a neutral critique simply because he's a cantillionaire. He's been a huge beneficiary of the money printers and multiple financial bailouts, which have been made necessary due to the fiat financial system. He's also the king of sugar water and banks, and he hates gold for a reason, because he's really in bed with all the banksters. If you want to read his arguments against gold, you can read this letter from 2011, in which he talks about the category of investment assets that will never produce anything, but that are produced in the buyer's hope that someone else will pay more for them in the future. This is the tulip bubble argument, which I've also discussed in another video. And he says the major asset in this category is gold, which I don't think he understands gold at all. Or if he understands it, he is obviously against it for his fiat reasons. So my first response to this critique of Bitcoin being an unproductive asset without cash flows, I would say that just because an asset has zero cash flow does not automatically make it a bad investment. And here's a list of unproductive assets that pay zero income or dividends, but have been historically good investments. And ironically, the first one is Berkshire Hathaway, of course. It doesn't offer you any yield. Buffett and Munger have done stock buybacks, but this is an example of an asset that doesn't have any cash flow. There's internal cash flow, it's just not paid out to shareholders. Amazon would be another example of this. Van Gogh paintings, any sort of fine art, gold, of course. Now, Amazon is a productive business, as we said, just like Berkshire Hathaway owns some operating businesses, owns some stocks, but Amazon itself, it's a productive business or corporation, and they've made the tax-efficient choice of reinvesting cash flow instead of paying a dividend. So this might not be the best example of an unproductive asset. We did say Berkshire does not pay a dividend, but they do stock buybacks. Things like Van Gogh and Picasso, as we know, have been great investments over time, though of course it's very hard to pick the winners in the space in a similar way to NFTs, for example. And there's a lot less talent in NFTs than there is in the traditional art market, unfortunately, which makes it more difficult to find the newest Van Gogh or the newest Picasso. So that is a sort of a search problem when you're investing in fine art. The other way, though, you can monetize fine art, you could, at least theoretically, I don't know that much about the space, but you could have, for example, if you wanted to turn a quote-unquote unproductive asset like a Monet or a Picasso into a quote-unquote productive asset, you could have a museum pay you an income stream, basically rent the painting from you month by month. And I'm not sure if this happens or not, or museums just provide a very safe storage and display area. But that would be an example of how you can turn a quote-unquote unproductive asset into an asset with cash flows. Finally, there's this example of gold, which actually has been a great way of storing value for thousands of years. It hasn't worked too well since 2009 for whatever reason. We've talked more about that. There was a very important invention that also happened in 2009, which is called Bitcoin. This may be contributing to gold losing market share, but gold, even though it doesn't provide a cash flow, has been a good hedge against monetary debasement, against inflation. 1 ounce of gold has always bought you a fine men's suit. If you're enjoying this video so far, I just ask you to hit that subscribe button and hit the like button. Maybe share this video with a few friends as well. So the other thing about gold we should say is not only is it a quote-unquote unproductive asset, and this in itself is I think it's a very unfair and loaded term. Like, is a Picasso or a Monet unproductive if it elicits beauty, etc.? But if unproductive means no cash flows, then it is an example. But the weird thing about gold, and the thing that Buffett does not point out, and he's very disingenuous as always in his critique of gold is money. Gold has been money. Something else that's money, a wad of $100 bills. Neither one, if you're holding them in your hand, neither one pays any cash flow. They're both unproductive assets, but they both happen to be money. Now you can make them earn a yield. You can lend out your gold to someone, maybe you'll get paid some interest rate. You can also take those physical dollar bills, which themselves do not pay any cash flow or any interest income. You can take those and deposit them in a bank, in a savings account or CD or something like this, and earn some interest income. But at the base layer, money does not have a yield. This is one of the things that makes it money. People want it because it is the most universal saleable asset. This is one of the characteristics of money. Now, why is this important? As I said, gold and physical cash are money. Money is an unproductive asset. It's not an operating company or a bond or some other sort of security, but money is an unproductive asset that everyone wants because it can be exchanged for almost anything in the world. And this is what we mean by, I believe the phrase is universal saleable asset. Money can also be used sometimes for the better and sometimes for the worse to store the fruits of your labor and pass them on to your future self or to your heirs. This is money as a store of value. Then there's money as a medium of exchange. It can be used to send value to someone in a different part of the world. You can take gold or a $100 bill anywhere in the world pretty much and be able to exchange it for goods and services. It might be a little more difficult to do this with the gold, but you can certainly find a way of converting it to the local fiat money. So both gold and physical cash still function as money to a large extent. Now, there's another asset that's being criticized as an unproductive asset, but I would argue that Bitcoin is an emerging form of money. It's very similar to a bearer asset, like holding a chunk of cash in your hand or holding a bar of gold. There's no counterparty risk. This is what a bearer asset means. If you have it in your hand, if you control your private keys, in the case of Bitcoin, you don't have to trust anyone to hold it for you, and your asset or your money cannot be turned off. In a different way, if you have money in a bank account, for example, it can be frozen, it can be turned off. If you own a stable coin like USDC, it can be frozen. If you own a security, an unregistered security like Ethereum, it can be turned off with or censored or turned off just by making one phone call to Infura and one phone call to Amazon Web Services. So these are very different from true base layer money. So you can call Bitcoin an unproductive asset, but Bitcoiners understand that it is a scarce asset that can be used as a medium of exchange and a store of value. If you don't think it's a good store of value or inflation hedge, I will link to in the description notes, I'll link to a video that talks about that. Now, I would say Bitcoin adoption is obviously still very far from 100%. This is why it's underpriced, and this is why there's still opportunity here. But Bitcoin does not have a yield because it is a form of money. It's an emerging form of money. Now, the only reason that you need to earn yield on your fiat money is to try to keep up with inflation, which is a built-in part of fiat money. All fiat money inflates its way over time, unfortunately. Inflation is another way of saying your money's loss of purchasing power. Now, most of the time, the yield on fiat money, this yield which is set by the central bank of that currency, is kept below the rate of inflation. The yield, the return you make on it, the interest rate is kept below the rate of inflation by central banks. This is a form of theft. It's called financial repression. That's the technical term for it. Now, Bitcoin has a fixed maximum supply and thus cannot be inflated away like fiat money, which makes earning yield on it much less important. It means that calling Bitcoin an unproductive asset is much less important because you don't really have to fight inflation in the same way as you do with your fiat dollars or fiat euros or fiat yen. Bitcoin has also appreciated about 200% per year historically, plus or minus. And of course, this may or may not continue, but a return like this really more than makes up for missing out on some pathetic 2% yield. Of course, if you want to take the risk, you can currently lend out your Bitcoin and generate a yield. But I would say that we're not quite at that point yet. It's much better to hodl and not try to generate a yield. It's just a bit too risky. And it's especially risky if you're not in some sort of multi-sig situation, but someone else is entirely holding your private keys. The lenders is holding your private keys. And people who deposited their Bitcoin into Celsius learned this lesson the hard way, not your keys, not your coins. Now, there's some related arguments that are related to this idea of Bitcoin not being a productive asset. You hear people often in the comments say Bitcoin doesn't do anything. Well, that's true, yes, because it is base layer money. Ethereum is gas. It's a utility token for a certain network that runs some smart contracts. Bitcoin doesn't have to do anything because it's trying to be money. A $100 bill, as we said, a gold bar, doesn't do anything either. Gold, of course, has industrial purposes, but those only account for about 10% of its value. If the monetary premium on gold disappeared, the price of gold would fall 90% overnight, and it would still be widely used in electronics, etc. In fact, it would probably be more widely used as that monetary premium got taken out of it. And so the fact that gold has these practical, quote unquote, practical purposes is actually a distraction. You want something that's pure money, that is pure monetary premium, just like Bitcoin is. Another related argument is Bitcoin doesn't have as many devs as Ethereum or Cardano or something like this. You often hear this, but that's of course because Ethereum and Cardano are basically software companies that have been legally structured in a very clever way to try to flout US securities law. I believe that Cardano was even issued in Japan for this purpose. Ethereum was originally the pre-sale and pre-mine were in Switzerland, etc. But these are basically software companies that masquerade as crypto, but their tokens are really unregistered securities, as we talked about in yesterday's video. So Ethereum may have more devs. There's certainly more devs working on Ethereum that are working on Bitcoin Core, the core software. But this doesn't matter because Microsoft has more devs than Bitcoin too. Who cares? It's playing a different game. It's a corporation. It's a centralized software company. And this is what Ethereum is as well. Ethereum passes the Howey test and should be regulated as a security for that reason, as we talked about in yesterday's video about Gary Gensler. Microsoft is not money, ETH is not money, Cardano is not money, only Bitcoin is base layer money. So if you're going to call it an unproductive asset, you at least need to make people aware that you are aware that money itself, base layer money, does not have an inherent yield. And calling something unproductive that helps to secure value, that helps to send value globally in just a couple minutes, and that helps to protect us from the monetary debasement of central banks, helps to protect us from inflation. Calling something like that unproductive is a very, very unfair critique. It's how Buffett has historically critiqued gold, and it's how these fiat cantillionaires try to maintain their control. And when they're scared of something like gold or Bitcoin, you should really wake up and take notice and ask why. Why does Buffett hate gold so much? Of course, his father was a gold bug. There may be some sort of psychological explanation as well, but it's also that he's made his money in companies, scummy companies like Goldman Sachs and Wells Fargo. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.